Bitcoin is capital. It's volatile, it's high performance. There's a lot of people that don't want it. The world is built on capital, but the world runs on credit. And so in order to convert capital into credit, you take BTC currency and you make it USD, or you make it euros, or we could create JPY. You strip the risk by over-collateralizing it. You damp the volatility by giving it a par value, a liquidation preference, and by managing, say, the dividend rate. You extract or distill the yield. You can set the yield, say, at 10% or whatever percent you want, and adjust it. And then you compress the duration. The capital investor, if you own Bitcoin, I say you got to hold it for 10 years, you'll get rich. But you get no money between now and then. The credit investor is, I'm going to give you immediate gratification. I'm going to start giving you cash dividends next month, every month. Okay, there's a place for both. In fact, the average person has certain money they need to have in credit and other money they need to have in capital. What we're doing is transforming digital capital to digital credit. And we've done it and created these various digital credit offerings. Strike is structured Bitcoin. It pays you a yield and gives you upside while you wait if you want the best of both worlds. Stride is super high yield, long duration credit. It's actually paying 12.9% effective yield right now. If what you want is max cash flow, then you would want something like this. Strife is super senior credit, so it's senior in the capital structure, has the most governance rights and liquidation preferences. It pays less. If you want investor protections, you get 9%. If you're willing to waive them, you get 12.9%. There are two different sets of investors. The investors that buy the one won't buy the other. We created both of them intentionally. Stretch is the most advanced instrument. What we did with Stretch is we wanted to create a high yield bank account where it would hold principal around $100, very, very close to that, and then would pay out a dividend every month. In order to do that, we had to make it adjustable every month. And so this is the first example of a treasury credit instrument issued in the industry. In fact, it's the first instrument of its time ever issued in the history of the capital markets. Nobody ever created a variable rate preferred equity until we did it. The reason we were able to do it is we had digital capital. You can't do it without digital capital. We had digital intelligence. I designed this with AI. It never would have come to market if I didn't have AI, because the lawyers told us they'd never done it before. The bankers said, we've never done it before. Everybody else said, it's never been done. It can't be done. It won't be done. And I said, well, the lawyers and the bankers say it can't be done. Can it be done? The AI said, yeah, of course it can be done. It's very straightforward. Do this and this and this. And so I basically fought and then convinced. You can convince people, you just need to have a lot of intelligence on your side. So we use modern technology to develop this. And I'll show you how it turns out. The fifth thing we did was stream. We created a Euro version of Strife. So if you're a Euro investor, you don't want European currency risk. You want to be paid in euros and you want Euro par value. So we launched that about a month ago. This is Stretch for the past 5 months, or since August 1st. You can see it came out just around 90. It's up around 97 right now. We've adjusted the dividend. Now I want to show you, I'm going to show you the difference between capital and credit here. That is Stretch versus Bitcoin. If you had $100 and you bought $100 of Bitcoin on August 1st, you would have lost $27 in the past 5 months, and you get no dividends. If you had bought Stretch, you would have made $7, and you would have collected $3.70 of dividends. So you look at that and you say, well, the Stretch investors did very well. In a bear market, the credit investors outperform the capital investors. Well, why does anybody want to buy Bitcoin? Well, because Bitcoin's up 50% a year for the past 5 years, and you're only going to get 10.75% on Stretch in steady state. But you're going to have to stomach the drawdowns, the roller coaster, if you want the capital. Again, ergo, if you have a 4 to 10 year time horizon, you should take the capital. But if you need the money in 4 months, 4 weeks, 4 days, or less than 4 years, or if you're risk adverse, you should take the credit. And you can see it takes a company like ours, you need a treasury company to strip the volatility and the risk off of the capital to get to the credit. That's what we're doing. And we're doing it increasingly aggressively now. This entire digital credit category we created in January. You can see it's gone from nothing to nearly $8 billion in 9 months. You can see liquidity is off the charts. This is the trading in those digital credit instruments. And this is per day, so sometimes you're getting 400 or 500 million in a day, or 400 million. Let me put this in perspective. The average preferred stock is listed over the counter, trades 100,000 a day. The typical public preferred stock that's successful, that is taken public, trades $1 million a day. The first securities we created, our first digital securities like Strife and Strike and Stride, they were 30 times more successful than that out of the box. They're trading 30 million a day. And then we finally got it right with Stretch, and we created the instrument everybody wants. It's trading 140 million a day. 100x, right? How do you know something's working? It's 100 times better. First, there's a revolution in credit markets. This is $300 trillion market. Why is digital credit better? Because you're building it on an appreciating asset, Bitcoin, not a depreciating asset, not a rusting warehouse or a product or a service. It's better because it's transparent, homogeneous, continuous. We update the credit model every 15 seconds. It's not like 10,000 mortgages wrapped into a mortgage-backed security. It's not like corporate credit or sovereign credit. It's better because it's equity, not debt. Bank credit is debt. Bank deposits are debt. Corporate credit is debt. What that means is they amplify risk to the issuer. Equity mitigates the risk. It's technically impossible to go bankrupt if you're actually creating amplification with equity, because the equity never comes due and the dividends can only be paid out if they wouldn't make you go bankrupt. The perpetual nature is another big change. We'll pay you the dividend forever. How do we pay the dividend forever? We invest the money forever. We're investing the money in the crypto economy forever. We're paying the dividend forever. Every other form of corporate credit is short duration. And then we tacked on this idea of taking it public. And because we took it public, it's liquid, it's global, it's easy, it's branded. There's a word, Stretch, S-T-R-C. Anybody can buy it anywhere in the world. And we create the credit digitally. If you give me 500 million, I create 500 million of backing collateral, and I do it simultaneously before the day is over. Imagine you wanted me to create $500 million worth of buildings in a single day. You see, we're running the investment cycle in one day, and it would take a real estate company 5 years. And it would take a company years. So the speed at which you're doing this is unprecedented. And then if you do it in a treasury company with that model, it all becomes tax deferred. And so what you see here is, on the left, traditional credit can pay you 2, 3, 4%. We can pay 10 or 12. We can pay higher dividends because we have a more efficient product and we have innovations in that credit. And that's based upon our business model. What is a Bitcoin treasury company? We sell securities to acquire capital. We issue digital credit, and that's tax deferred, and then we pay the dividends tax deferred, and the capital appreciates tax deferred. It's triple tax deferred. This is the most efficient, scalable fixed income generator in the world. Like there's no other type of company in the world that can generate billions or tens or hundreds of billions of dollars of dividends tax deferred. You can't do it with oil and gas. You can't do it with real estate. You can't do it in the traditional way, selling products and services. So The breakthrough is based on digital capital and this new type of business model. You think of the company as a digital credit factory, really. We're swapping US dollar yield forever to one set of investors, and we're creating BTC yield for the equity investors. And you can do it with dollars, you can do it with euros, you could do it with yen. Ultimately, what's the result? Well, return of capital dividends give you 64% more money. They just pay you a lot more. And when you compare them to other opportunities, if you're a United States citizen, your bank's giving you 40 basis points, the money markets are giving you 400 basis points, taxable. We're giving you 10.8% and stretch. That's a tax equivalent yield of 17%. So that's 4x the money market. That's 20x what the bank wants to give you. If you live in New York City, it's a bank account that pays you 22%. Or you can collect 4% from the money market. Like, it's so much better, right, that you can't really imagine why would you want the other thing. This is Europe, right? In Europe, the money markets pay you 1.5%. Stream pays you 12.5% effective yield, but if you're getting taxed, it's almost 20%. You live in Vienna or Brussels, it's like a bank that pays you 27% interest. Think about it. Right? This is the revolution. We're basically going to digitally transform the banking industry, the money market industry, the credit industry. And it's not just stretch. Every digital credit instrument is so much better than every conventional credit instrument. It's not even funny. Like, look at junk bonds. They pay you 6%. And our instruments are tax equivalent 14 to 20. Or look at private credit, it's 7. It's opaque, it's heterogeneous. And of course, look at the entire world. Stretch is a 17% tax equivalent yield. The money markets in the US are 4%. In Korea, they're 2%. In Europe, they're less than 1%. In Singapore, 1%. In Japan, 50 basis points. In Switzerland, they're negative. So when we talk about digitally transforming the world, what we're really talking about is fixing the money and fixing the banking system and fixing the credit system. And remember I said the world runs on credit? Okay, well, how are you supposed to give your kid an annuity in Switzerland or Japan when the bank's offering you nothing? Right? How do you get 10% in Swiss francs or 10% in yen? And the answer is digital credit. And all of these companies that are transforming the world, they're going to go into Japan, like Metaplanet, or Switzerland, and they're going to go into Korea, and if it's not our company, it'll be another local company. And the truth is, the world, the world wants a 10% bank account. So I'm going to make one point, right, which is if you walk down the street and you ask 100 people, what do you want? Do you want to get 30 or 40% a year with 40 volatility? Between 1 and 5 say, yeah, I could put some of my money into that. But a lot of people are afraid. If you ask the average person, would you like a bank account that pays you 10% tax deferred? Everybody wants that. So if you're not sure what you want, you probably want something like Stretch, STRC. And if you think about the implications of this for the digital economy, what this means is that on a foundation of Bitcoin, digital capital, we're going to see digital credit spread into every single market, and it's going to fix the banking system. It's going to fix the money market system. And it's probably going to reset the cost of capital for corporate credit, private credit, other types of credit securities. The winner is the investor. The winner is the digital economy. The winner is the Bitcoin holder in the Bitcoin community. The loser is any bureaucratic, antiquated oligopoly that wants to keep your money and pay you nothing. And that's a lot of different systems everywhere in the world, but we're reforming that system to the benefit of humanity. And you're all on the journey with us, so thank you for your support.